Welcome, everyone, to the December 2024 edition of our monthly market update from Kingdom Focused Financial with your hosts, Michael Smith and Chuck Edsweiler. Take it away.
Great. Thank you, Derek, and welcome everybody. It's great to have you back and paying attention here in the final month of the year. We've made it through 2024. Christmas trees and music and lights, they're all staring us in the face. And here in Pennsylvania, where I'm recording this, so is the cold. It's a little burr. And I know just in the northwest corner of PA, they're actually buried in a little snow already this year. So, Chuck, we are wrapping up the year in true normal calendar style, right? It's getting to be winter and it feels like it outside, kind of par for the course for how this year went. With the markets, it was sort of par for the course, just like we said. So we got some information for you here in the next 10, 12 minutes that we plan to be on. As usual, remember, this is our thoughts and our opinions. We want to share with you kind of what's going into the makeup of our portfolios and what we see coming up. But it is not intended to be direct advice for you. As always, call our office with specific information or questions you have so that we can work with you individually to make it fit you better. So let's start, Chuck, with a real quick recap of what 2024 was. I just mentioned it kind of went like we said, which is it's always nice when you have that happen. And granted, we still have a couple of weeks left in this year, and anything can change. We know that, but it's looking like we'll end the year on a positive note. These things they played out. Fed policy was an important part this year. Oil, the U.S. dollar, the concept of reshoring. They all played a role and ended up driving a very positive number for most of our clients, both conservative clients as well as aggressive clients. And that's kind of unique as well, because sometimes they move in opposite directions. But interest rates have gone up. So overall, it was pretty good. Hopefully, you have found that to be true in your portfolio. And so we're going to kind of move on from this and start looking ahead into next year. And I want to address that by saying we've just come through a really big change. I know for many of you over the last 2 or 3 months, our conversations were labored with the election. Well, that's in the rearview mirror. We now know here in the US, Donald Trump is the president-elect, and I have clients on both sides of the aisle. And I've been hearing it from both. And you've certainly been hearing from me that the market is unsettled up to the election and that it really didn't matter who was in the White House. It just needed to understand what direction we were moving. Yet those conversations continue. And so I want to just pause here and say, as we look ahead into next year, certainly who's in control of the House and the Senate and the White House does influence our decisions in terms of sectors of the market and where we want to go. But the market doesn't really care. We don't have a separate portfolio for Republicans versus Democrats versus independents. If you're working with us, it's the same market for all of us, and we're working hard for everybody. Before the election, there were people that wanted to put everything under the mattress from one side of the argument. And now after the election, we've already had some people call our office and say, put everything under the mattress because things are going to go downhill. So again, embrace the US economy is what I'm going to say, because it's still running strong. And I think we're gonna talk about that in the next couple of slides. But if nothing else coming from this election, hopefully you've learned that, okay, while those are significant points in times and events, it's only one piece of influence in the overall market. And so we start separating our emotions from the data and statistics that drive our investment decisions for the long term. And so as we move into 2025, I'm smiling. I'm looking ahead. Chuck, I'm going to turn it over to you to share some numbers, but everything that's happened here in the past year, post-election, where we're going, this doesn't have to do with the person. It has to do with the market. I think there's a lot of positives for us to be looking at in 2025. What are your thoughts?
I definitely think there are, Michael, and great tee up here. One of the common questions we've been getting is what you just said. We've had not only had one very good year, 2024. Look at the bottom of that chart. We've had 2 years in a row. If we were to finish up the returns as of today, we'd be up 25% 2 years in a row. So what we did, Michael, we went back post World War II and asked ourselves the question: if we ever had 2 good years in a row like this, meaning 20% or greater. Well, it's happened 8 times. And I would want to know as an investor, what are the probabilities? We can't predict the future. We can't certainly guarantee anything. But if I look at that median number, year 3, Michael, after 2 consecutive 20% gains in the S&P 500, the median rate of return is 12.8%. And we had 2 negative years, but 6 out of 8 is 75%. So what does that mean? There's a 75% probability, based on historical precedents, of having a positive return this year, and one that would be in the range of above the normal 10%. So I think that's the first thing that people should take with them, is that we've had this before, and the year 3 has been pretty good.
So that means a very Merry Christmas, doesn't it?
Yes.
Right? Some good news on the horizon.
Absolutely.
Regardless of what your angst was last month, I think the fact that that election is over and now we've got some stability.
Yeah.
Use that term relatively safely. I know some people think we're very unstable right now, but stability in the decision moving forward for the next 4 years, it does. That's a strong percentage that suggests, hey, we should be looking at least this coming year, 2025. We'll have more data next year when we get into years 2, 3, and 4 of a president's cycle, but that makes me smile for sure.
As it should. So here we even get a second component of this, Michael. This is a very busy chart, but I thought that our listeners, our clients, investors would really grasp onto this. So what is this saying? Going back to 1921, a long time ago, over a century ago, the Fed has embarked on 24 rate cutting cycles. Now, the not so good news is, in the blue line, 18 of those 24 times, Michael, the Fed waited too long and the economy went into recession. However, the good news is 8 of those 24, in red, they landed the plane softly, the soft landing scenario, which is the camp we've been in all along. So if I look at my vertical dash line in the middle, that's day 0. That would be September 18th. That's the first rate cut cycle that the Fed had begun. If I take those 8 times and I make a trend line out of them going out over the next year, 24%. So what does that mean? When the Fed begins to cut rates, day 1 going out 1 year, assuming we don't go into recession, the trend line shows an average of a 24% year following that first rate cut. Another pretty good, hopefully for our clients, to grasp on these statistics. I think this is a really good indicator of what could happen next year, Michael.
I agree. And so now not only Merry Christmas, Happy New Year as well with this one. But
yeah,
obviously, you know, a lot of water yet to come over the dam as we move forward. But the government has not held back in telling the public that this is their intent. They're really trying to find and measure and make that soft landing happen. I think those statistics show us just how difficult it can be. But in today's world, with data being much more readily available, a lot faster when it comes to them making decisions and where they interact, I think that probability of them achieving that has gotten better. This is certainly exciting news, but we're not done yet. We have another point that we want to talk about as well.
Yeah, it's the trifecta, right? So 3 reasons, hopefully, that will give an optimistic viewpoint of 2025. So here's another one. So going back to post-World War II, when the Fed begins to cut rates and the stock market was already within 2% of an all-time high. So let's go back to September 18th. The Fed began their first rate cut. Actually, as you said, they cut rates twice in one meeting. The next day, Michael, September 19th, we hit an all-time high. As of this recording, which is December 6th, we sit at an all-time high. Again, I would want to know as an investor, are we getting long in the tooth, or history suggests something otherwise, meaning this continues? So if I look out over the next year, I see those 18 times that this has occurred, not one had a negative forthcoming year. Now, that doesn't guarantee anything. It just gives a probability set to our investors. And the key thing is, Michael, the average rate of return 13.9%. So again, this kind of completes the trifecta here of understanding why we're optimistic about next year, given the landscape as of December 6th of 2024.
Yeah, and this is something that actually has already come up in conversations with some of you. You've called, you've raised that concern, and rightfully so. When we reach a new high, should we take and tuck it away and wait for the market to come down? And I think that's a very valid question and concern.
Absolutely.
But the answer isn't just a flat yes. It's not a black and white, and that's where I think this data comes in and helps us understand. Not only are we at new market highs, we've just locked in a new president. So the next 4 years agenda is kind of known right now to some extent. We are just now embarking on the beginning of a rate cut cycle, and they go in cycles typically, which is usually a positive thing for the markets. So given those factors, there's a lot of reason to believe that there's at least one more year ahead of us, or at least the first 3 quarters of this year, right? Using September as that benchmark starting point, where the market has every reason to see if it's going to do well and should do well in doing that. Certainly good news as we move forward.
Well said, Michael.
And so hopefully this helps you understand what we're looking at. We're very much moving into 2025 feeling positive about where things are, but cautious at the same time. And I hope that this data allows you to sit back after you turn this video off today and enjoy the next season of 3 or 4 weeks here as we go through the Christmas holiday to celebrate the birth of our Lord and Savior Jesus, and into the new year with your family and your friends as well. And we'll pick up again in January, where we're going to introduce to you our focus for 2025. We'll have a new theme that I plan to introduce you to come that point, and we will march ahead in 2025. Before we let you go, there are a couple of things I do want to wrap up with today. Just as a reminder for here in December, these are critical things. First and foremost, remember those of you who are at that age where you have required minimum distributions. This is your last chance to get those done. And a key date here, December 20th, that's really the cutoff because of where the holidays fall and where market closures are in place. Those really should be addressed by the 20th of this month before you walk away for the Christmas holiday. So if you have not taken care of that yet, you probably have heard from our office. If you're know that you haven't and you're concerned, reach out to us because we need to get that taken care of for you. The second thing, there are a number of you, we've been doing a lot of these. Most everyone that has contacted us about Roth conversions for this year has been completed. We still have some to work through as we've been waiting on some data. If you were planning to do a Roth conversion, December 18th is the cutoff for that. We're running out of time in order to have all the steps completed to get that completely taken care of here in this calendar year. Roth conversions do need to happen in this calendar year in order to count for this tax year. So 2 very important things to make sure you're knocking off for December if you haven't. And lastly, another word of caution for you. Prepare. We're wrapping up the year. This is a great month to start gathering things together as you look ahead to filing your taxes for the coming year. It's been a very good year. Now, capital gains in this year, we haven't captured a lot for most people because our portfolio has been pretty consistent and we haven't had to make a lot of changes. But we have higher interest rates than you have been used to for the last 10 years. It will look very different. And so this is my reminder that pay attention to that number on your statements and what you might be prepping for on your taxes. Your number of interest income this year will probably be higher than 2023 and certainly higher than the last 7 or 8 years prior to that. So it will have an impact on taxable income in 2024 for people. It's something that I want to make sure you're prepared for. I'm not complaining about it because that means you made some money in doing that, and higher interest can be a good thing unless you have that debt. So we won't go into that conversation today. Thank you for watching. We appreciate you. Thank you for trusting Kingdom Focus Financial for your finances and for the advice that we provide. We are wishing you and your family a wonderful Christmas season. We hope that you get everything that you were hoping for, and that your health is good and things work well. We look forward to seeing you in the new year. Thank you very much. Have a wonderful day.